Good morning. Welcome to Market Wake Up. It's just gone 8:30 a.m. British Standard Time. My name's Jordan. This is John, and we're going to get you up to date with everything you need to know ahead of your trading today. And actually, John, a little bit of a surprise for everyone. I've got a trade idea for a big bite today. Trade idea day, right? And it's one that needs to be executed today and closed by the end of today. I know, which is very different to what we do, but I'm going to share my thought process a little bit later in the big bite. Without further ado, let us know where you're tuning in from, and let's get into Market Wake Up. Good morning. Good morning, John. How you doing?
I'm good, mate. I don't know why, but this week feels like it's been going forever, and it's only Tuesday.
I feel like I can agree with you on that one. It feels like I think it's the weekend. It just went so quickly. But yeah, no, I know what you mean.
I had to triple check my phone to see if it was not a Thursday. I was like, I swear it's Thursday. It just feels like a Thursday today.
Wish it was a Thursday. Then Friday would be tomorrow and we'd be happy. But no, we got a long week ahead of us, John. We got a long week, but that's good because it's a trading week, and trading week is what we like. So good morning, first of all, to Musclay, to Paul, to Andrew, to Malcolm, and to David as well. NG David tuning in from Ghana. Malcolm coming in from Thailand as well. Real international audience we have here. See, I'm in the zone. I'm in the zone. Institution. Good morning, David. Welcome in. But yeah, real international. Welcome to my time zone, Thailand. I think it's only an hour difference actually to Thailand, but we might be the same time zone. So good afternoon to you, Malcolm. Early afternoon. But yeah, look, I'm looking forward to today because I took a different approach. I was scratching the bottom of the barrel. I feel like most of the positions which I currently have and want, and I've spoken about. So today I was like, okay, let's take a different approach. Not something that I would usually do, but let me just see if I can challenge the norm a little bit and see if I can get anything. And I'm quite excited to talk about the big bite in a little bit, and I'll share a bit more. But for now, let's talk about market leftovers, and let's talk about your country, the unemployment rate. We laughed about this last week. I said, wouldn't it be funny if claimant count change went up and the unemployment rate come down? John, it happened. Claimant count change upticked 27.9K, and the unemployment rate has dropped to 4%.
You're like a wizard. You're a wizard, Harry, is what Hagrid would say.
But I said this in a comedic fashion of wouldn't that just be oddly confusing? It is oddly confusing. Why is the unemployment rate dropping, but more people claiming unemployment claims?
It's a good question. It's interesting because the unemployment rate is lagging, right?
Yep.
Versus the claimant count. So we did actually see the claimant count before come down a lot lower, right, to 0.3. So, I think we've got that unemployment downtick because it's a little bit lagging behind what's going on with the claimant count situation. So there is that element to it. That's why obviously the claimant count on your Forex calendars is red and your unemployment rate is yellow. But arguably, obviously, everyone should be looking at what the unemployment rate is doing. And the unemployment rate down to 4%, I think, is why we haven't seen much movement in the pound at the moment. Actually, pound's still a little bit stronger than most currencies across the boards. The unemployment rate has took a downturn since July, so it's not even seeing like a mega uptick at any point. It's actually declining at the moment, so it's on a trend lower for the past few months. So I think this is also kind of fueling, again, what is the Bank of England going to do with this type of information? If they've got the opportunity to hold rates higher, I think they will, and I think they probably should, because obviously there's the argument of the inflation argument, and if that's going to rear its ugly head again, So, I think,
Ugly head.
yeah, it's ugly head. Yeah. Nobody likes inflation, I guess, and I think, and especially, it's quite interesting because I've only ever really known sort of, I guess, low inflation, low interest rates, really, because I was
Yeah.
around for it, but I wasn't in it, right?
Yeah.
As I am now. So it's interesting to see where we go from here. Are we going to follow a similar path that what happened in like the 70s and 80s, where everyone started cutting interest rates and then suddenly inflation popped higher again? Because if just, I always talk about the US, obviously, but the US in comparison, they're cutting rates, but the market's doing good. Like, if you look at the indicators, the market's doing well. So interesting to see that, because I just think cutting rates would be a little bit more inflationary. So there is that element that inflation could spark higher. So I think the Bank of England have got a bit of a different scenario. They did cut rates, but they've kind of held where they are. And there's been a lot of talk around, I've seen recently, about how the UK is almost just being propped up right now. I think everyone's waiting for the inflation data coming up, which is on Wednesday, I believe. Yeah, Wednesday.
Mm-hmm.
It's seen if there's a downtick from 2.2% to 1.9%. I think that's going to be a catalyst that could start to fuel a little bit of selling pressure in the pound if that was the case. But I think if we hold a higher inflation rate, then, people are trying to position themselves short pound at the moment, I feel. So we could see a little bit of a break higher there. But yeah, interesting going on in the UK at the moment. Obviously, we saw growth in the second quarter as well. Not amazing growth, but there was growth. Unemployment's coming down. Inflation is potentially coming down as well. So yeah, it'd be interesting to see how this kind of filters into Bank of England's notions going forward. They've obviously been, Bailey's been very vocal on what he could do with the market. So yeah, but for me right now, I still feel like pound is a stronger currency. I still like it against the euro, for instance.
Well, I think the euro is still. Oh, I was going to say something that probably I'm not allowed to say.
In the bin.
So I still think it's in the bin. Yeah, I still think the euro's in the bin. And the Bank of England, they're still reasonably high. They've cut once, 25 basis points a little while ago to 5%. And they are one of the more elevated interest rate policies. And if we keep seeing the unemployment rate come down the way it is, I mean, it's not really asking for stimulus. It's not really asking the Bank of England to continue to cut those interest rates, right? The way that the data is coming in at the moment. So it is a really interesting picture that is unfolding in the UK, and it's got one that it's got my attention. It's got my attention, essentially. I'm curious, and I want to know about it. Now, what I love about what you actually started that with is I was around, but I wasn't in the know. And that's a lot of the things when we talk macro, it's the way we feel, right? Because we were there when we had higher interest rate, 2008 financial crisis. Like, I was here on earth. I had no idea what was happening and what the implications were. But now, thanks to my career and all the research that we do here, I now know what the implications are and I know how this works. So it's always fascinating kind of walking back through history with some of these things and understanding, okay, so that's why that happened. And that's, were you ever interested in history in school?
I was awful at history. I was really awful. My teacher kicked me out pretty much.
I was no good at grading wise, but I was always interested.
Oh yeah. Like I love history in terms of kind of, the
Roman Empire.
Yeah. And like, I'm really fascinated in what happened in world wars and stuff.
Yeah.
Really fascinated by that.
Yeah, me too. It's strange, but anyway, I like kind of re-walking through some of these economic events with more knowledge now, and our job is to depict it and to trade it, and that's just a weird place to be, but a fascinating and challenging place to be, and that's what I really like about trading. I just wanted to give you a little rant about how I felt about trading. So there you go. Congratulations, everyone. You just heard that. Take it. Yeah, take that how you want to take it. Let's get into some freshly squeezed. Let's have a look at what's been happening in the market. The VIX come down a little bit today. We're priced in. Ignore that. We're priced in at 19.6. So we did sign a little bit of a drop off in the VIX, which interesting. moving into the election. I didn't see this kind of dying off. I thought we would slowly climb towards the election, but nevertheless, it's not the first time I've been wrong in 2024. So it's just another time that I will be. So the VIX sitting at 19.6 at the moment, which is the biggest takeaway here. I'm going to run through the assets on the right-hand side of your screen. So feel free to join me as I go through. We're going to have a look, get you up to date with where all the assets are, and then we'll jump into the fun stuff that we have coming up later. So Aussie dollar to start us off is down 0.35%. The euro is down 0.2%. The pound's pretty much unchanged. US dollar CAD's up 0.13%, and US dollar Japanese yen is down 0.35%. The XJO is up 0.27%. The DAX is up 0.5%. DAX seems to be doing bits at the moment. The Nikkei is down 0.7%. The FTSE is down 0.35%, and the S&P 500 relatively unchanged this morning in pre-market conditions. Coffee up 3.4%. Lovely. Gold up 0.8%. 0.08%. Nat gas is down 0.7%, silver's down 0.5%, sugar's down 0.5%, oil's down 1.5%. Bitcoin down 0.4%, Ethereum down 0.3%, and bond yields relatively unchanged, falling off a little bit, kind of reversing the gains we had yesterday. Well, actually, for the US bonds, it was Fridays that moved because they were closed yesterday because of Columbus Day. But there's your quick synopsis of what we're looking at today in today's trading room.
Yeah, it's interesting, isn't it, the VIX? Because I was looking at the seasonals on the VIX in an election period, and there's actually a 100% winning trades between October and November in an election period of upside, according to SeasonX, which is quite interesting. Although there's not a lot of data to kind of work with within that. It's just interesting to see that typically in an election period, which would be expected, right? You know, you would expect volatility to rise in an election, and especially because it's so close. It's not too close to call. Even if you look at the betting odds, you know, it's near enough 50-50. I think Trump's just taken the lead again after Harris was in the lead for a while. And then it's going to be all the talk about sort of the swing states and all the talk about, you know, if it's going to be a sort of a sweep by the Republicans or a sweep by the Democrats or vice versa. But yeah, it's so close to call. I don't understand why the market is not feeling it. If that makes sense. I don't get why the market is not trying to price that in right now, whether they're going to wait for the event to happen to get involved with it. Because, you know, there's an interesting strategy out there, and I've traded the VIX before, and I've traded it especially after sort of big volatility spikes. There's a good little strategy with the VIX which you can try and short it after these big moves. And I was looking for another sort of catalyst that would spike the market again, and I thought the election, or coming into the election, would be that. But maybe it's just going to be the election day where it's going to be the big spike in volatility before seeing it moves down. Other than that, though, across the board, you know, Aussie weakness still being felt around. That's something I've been big on for the past couple of weeks. So still happy to look for that Aussie weakness right now. A little bit of Kiwi weakness as well. But other than that, there's not really a lot going on. I think obviously the data coming out of the pound today was interesting. So, you know, that's a little bit buoyed. Pound Aussie still, I feel, is a good market to have a little look at as well. But other than that, there's not really a lot moving markets, which is interesting. I wondered as well how risk on, risk off. Sorry, I'm going a bit of a rant here. Risk on, risk off situation was playing in the markets, and I was looking at kind of risk assets, and I was looking at the likes of Bitcoin and stuff. And again, Bitcoin has had a mild rally, but kind of just settled.
Hang on. Back up. Do you put Bitcoin in risk on or risk off?
Risk on.
Why?
Because it's a risk asset.
Is it?
Yes, it's risky.
Yeah,
risky
but
in nature.
When you look at the price action that it's done in risk on, risk off events, it is matched those that are risk off.
Okay, well, I have not looked at that closely in terms of lining it up.
This is an argument I have many a time because I haven't put it in a basket yet, right? Because fundamentally I sit here and go, yeah, Bitcoin's risk on. But the way that it actually trades around risk on events shows
What
that it
events are you
might
talking
actually be
about?
risk off. Range between elections, both in the US and elsewhere, looking at wars, looking at turmoil in oil, looking at sanctions, the way that it's traded.
See, then my theory with Bitcoin is none of that matters. You know, like when somebody does a presentation on the fact that what's going on in like with the US dollar right now is going to impact Bitcoin prices. In my opinion, load of rubbish, right? Bitcoin.
This is fascinating.
I think it's I think it's a load of rubbish. You know, I used to see videos before where people would talk about how, you know, the bond market will impact Bitcoin and how it, you know, correlates and stuff, and the dollar index correlate. I don't think so. I don't think so. You know, in my opinion, it's a market that's driven purely by speculation. Right? It has, in my opinion, still, it has no utility, right? You can go and pay for something with Bitcoin, but is it worth it for you to go and pay something with Bitcoin? No, because price fluctuates too much, right? So for me, it's more of a sentiment of what's going on in the market, right? It's a sentiment indicator for me.
But I mean,
if Bitcoin prices are rallying, I think the sentiment within the market is they are risk on, and you're not seeing that right now. You're not seeing that move. Does that make sense? I'm coming from a different view.
Yes.
This could create arguments.
This is interesting. This is fascinating to me. I will get to my big but I am because I'm not a cryptocurrency trader or holder, right? But I do understand the impact it's had outside of the Western world.
Right.
A key look in is the Turkish lira and the correlations between those. You know, when you're looking at some of these economies that are a bit smaller and volatile, their currencies, the inflation rates that they deal with. I mean, look in Brazil, right? Look at the inflation rates that they have to put up with. It does make sense to go to Bitcoin. It does make sense to go to cryptocurrency, to get out of that local currency and hold something else. And it's not as simple as just getting access to US dollars and they just transition it, right? It is a lot easier for for different people and even the governments, which they are doing. The governments are massive holders of these cryptocurrencies to get access to that. So to say there's no correlation or you think it's rubbish, I want to challenge, which... This is fun for me. This is the first time like we've clashed because I think it is a real asset, right? It's gone past the phase of where it gets attention. Okay, now do I trust my money sitting in it? No. But does that mean that sentiment around the world affects the price? No, I don't trust my money sitting in Nvidia. But I think it's a fantastic company, and I think other people will trust their money in it, right? And that's how I look at Bitcoin as another stock. It's just a lot bigger. It's an international stock, and the correlations I think are something that need to be analyzed and understood. Because when we're talking risk on, risk off, if we know historically, seasonally, that a certain asset is going to do a certain thing in a certain event, then we're not traders unless we back that. Right. And that's exactly what we do. And putting that in a basket is something I've always struggled with to figure out because I don't fundamentally care about it personally.
Yeah.
Right. I don't care. I know that'll probably upset a few people. I've got great friends of mine that are just full-time crypto, like all in crypto and stuff like that. Like, that's fine. I'm not saying it's a bad thing. I'm not saying it's not cool or what everything you do. I just don't care. And that's how I feel. But I do care about making money. And if we can find the correlations and I can put it in a basket, then I will capitalize on that money-making opportunity. And that's how I think about it. And when I have looked into it and looked at different events, you know, when Russia went in Ukraine, for example, I was scanning to figure out what to get in. Now I went gold, and I'm pretty sure I'll have to double check that information, but I'm pretty sure I would have been much better off getting in crypto.
Interesting.
Yeah.
I just maybe there's not enough data there really for the asset to be judged in that way, right? I've kind of, I guess, blanket statemented it with, what I've said. It'd be interesting to look into. Maybe I will deep dive into it a little bit more, because I used to be in the crypto world, and then I got out of the crypto world because the more I was around it, the more I saw the problems with it. Right. I think if crypto,
I feel like that with the US dollar.
yeah. I think if it got regulated tomorrow, the price of it will fly. Right, the price will absolutely fly. But I just don't see. I don't see where this regulation is going to come in right now. I still don't see where that regulation is going to come in, because all the world governments have no control over this thing. Really?
I think that's the point.
Yeah, that is the point of it. But so what is it? So what does it do?
I'm not going to give you a crash course on cryptocurrencies.
No, right? I know, but I'm kind of saying, like,
if
I just don't see
wanted
to
store value,
it's literally,
it's like storing gold under your bed.
Yeah,
like physically holding gold and keeping it under your bed that you protect. Like it right now, yes, a lot more volatile, but in the circumstance it was pegged or something, I can see. Yes, but whether regulation, like I can't see a world where regulation comes in. Yeah. But I find it interesting. And we've obviously got Barry going, John, you've lost 2 billion future subscribers. But nevertheless, look, let's get in the big bite. Let's talk about what I wanted to chat about today, and let's get some music going. Let's get in the big bite. Right. I'm going to talk about Great British Pound, because we just had claiming account change. I'm going to talk about the Canadian dollar, because we've got CPI coming out this afternoon. Right. And this analysis is going to use both, and it's a tradable idea for today. Why? Because we're getting news out of both of these today, which is not a very common occurrence. But I thought, in a world where we care so much about historical data and seasonal patterns, what happens if I look into the days where these two events have fallen on each other in Great British Pound CAD?
Okay.
Interesting, right? So you got to take two half of the sandwich. We've got Great British Pound and we've got the Canadian dollar. So I'm going to start us off having a look into the Canadian dollar. Right, we've got CPI coming out this afternoon. Now the Canadian dollar situation is a bit of an interesting one. We are slowly bringing those interest rates down. We do know it's heavily correlated with oil. Okay, we also know that our forecasts for oil are all over the shop. Seasonally, weak in October, but do we actually believe that at the moment? No. Just because everything that's happening right now, if you're looking over the past 5 days, they're not correlating the way that they should be. Oil's finding a bit of an uptick, then a bit of a downtick. Canadian dollar's falling off a cliff like all commodity currencies kind of are, right? And I find that kind of interesting. But when I look at the US dollar CAD pair, historically, when we have Canadian CPI, it has averaged a 0.5% move on the day. Right, a 0.5% in the currency. That's the average it's done over the past 12 months. So that's the past 12 events. Okay. When CPI has come out higher than expected, it's declined 63% of the time, which isn't enough data for me to say that's actually useful. If CPI comes in lower than expected, it's risen 70% of the time, gaining 0.5%, which I was like, okay, that's a little bit interesting for me. I've talked about the correlation with oil and my concern with it, but when you actually pull these charts up at the moment, and what I've got here is one is Great British Pound CAD, the other is WTI crude oil. These should have a pretty good inverse correlation, right? Whatever oil's doing, Canadian dollar should be doing kind of the opposite. Now, when you look at this with US dollar CAD, it's completely different, but what you can see is the correlation we've had recently is actually pretty good. It's actually pretty good. The negative correlation that we have when you pair something with the Canadian is that last pair in there, right? As we're seeing oil tumble and seasonally does in October, we do tend to see the seasonal pattern of CPI come down at the same time, because like you've touched on the last few times, when oil goes up, CPI goes up. When oil comes down, CPI comes down. Now, oil hasn't necessarily come down. Seasonally expected, but it hasn't done it yet. And that's going to be really, really interesting for me to have a look at, because when we actually have a look at the Canadian dollar situation, let me scroll ahead here. This is the trim CPI year on year, obviously coming down from where we were up at those highs in and around that 5% COVID time and all that fun stuff that we went through. Coming back down, sitting at 2.4%. Now, if you have a look at month on month, it has been skewed everywhere. But recently, we have been able to really pull this in, beating expectations quite astronomically, hence why they are cutting rates quite quickly. Now, I think we're running into a situation where the Bank of Canada are like, have we cut too much, or do we need to continue to cut? And they're getting in that relative seesaw, because they know the oil pressures. And if oil does do its seasonal pattern, then they know CPI is going to come down whether they cut or not, right? And they're going to make sure they front run that, so to speak. Okay. I found this really, really interesting. So I was looking through the statistics of what really happens around this, and 3 out of the last 5 times that the October CPI come out below expectations, right? We're expected to remain the same. 0.2% month on month, 2.4% trim CPI. We're expected to remain the same. 3 out of the last 5 years, if it fell below market expectations, it led to CAD weakness. Really, really interesting. So in my mind, looking at this is like, okay, if I had a bit of a trade idea here, if CAD CPI prints high, buy CAD. If CAD CPI disappoints, short CAD. Very, very simple. But then I want to pair it with the pound. I want to pair it with the pound because we had claimant count change. Oops, sorry, everyone. We were just talking about this, right? And we have come down, and then that unemployment rate is also coming down, popping around here. Actually reminds me of the VIX chart. Looking at that, but we are just kind of popping around and floating around now, having that claimant count uptick, but then the unemployment rate down tick is really, really interesting me. Now I'm going to lean into claimant count change, and also I did see Richard popped in and said, "Did you notice the revision?" And I haven't. I haven't noticed the revision, so let me go ahead and have a look at that.
0.3, wasn't it?
Okay, yeah, a very small revision. Okay, that's okay. That's not a concern. But what I really essentially wanted to look into is what were the patterns when we missed expectations for claimant count change or beat expectations. Okay, so historically, what we have seen is over the past 12 releases, a worse than expected print for claimant count change alone, average 0.3% drop in the pound. Probability of the Great British Pound US dollar declining when this surprises negatively is 75%.
Okay.
We really move, which I find interesting, right? Looking in this, right, having an idea of that labor done. Now, the fact that we didn't really move, I found super, super interesting. But what I wanted to do was pair the pound and Canadian dollar together. And I found the last 10 dual releases, the last 10 times that these two release on the same day, average move of 0.9% in the chart. So almost a 1% move in Great British Pound CAD the last time these two fell in. Okay. If the UK data disappoints and CAD CPI beats expectations, 78% of the time, Great British Pound CAD has dropped 0.6%.
Okay.
The opposite happens. Great British Pound had good news and CAD CPI had bad news. 72% of the time, it's risen 0.55%. I was like, that's interesting. Really, really interesting. So my trade idea today, because we've already got one piece of the information, the claimant challenge beat negatively, is if CAD CPI comes in hot, short Great British Pound CAD.
Okay.
Which we can see are already at the highs. If we're looking intraday, let me get rid of the oil chart here for you. You're looking intraday, look at this thing run.
Sorry, George, you're not sharing that screen.
I am not sharing that. This thing is running right now, which I find really, really interesting because the reaction to this is so delayed, which is where the claimant count change come out. Now, remember, those statistics, 78%, I think it was we dropped 0.6%. This has happened. And so far today, we are already up 0.2%, which means that average, if we were to follow that average, it'll be a 0.8% drop in Great British Pound CAD if CAD CPI prints hot.
That's really interesting.
Very different way. I've told you, I've warned you. It's a very different way of thinking, right? It's not a way I usually do, but I wanted to get in deep today. I wanted to find something a little bit interesting. So if CAD CPI comes out hot today and we wanted to back a probability of 78%, we should see Great British Pound CAD close down about 0.6% negative.
I think we should come back to this in the morning in the leftovers and see what's happened.
I agree. I think it's an interesting, like, as I said, this was one of those ones I dived deep. I was like, I don't know where I'm going with this, but I'm going to follow it. Yeah. And we're going to see what comes out. Guys, I hope you enjoyed it. A little bit different today. We're going to be back tomorrow at 8:30 a.m. at British Standard Time to figure out how this went. CAD CPI comes out in a little bit. About 4 hours from now, CAD CPI is released. Let's see where Great British Pound CAD closes on the day, shall we? John, thank you so much for joining us. Everyone else, thank you for joining us. We'll be back tomorrow, same time. See you soon.
Peace.